Hello and welcome again to Stocks Advisor. Today we will talk about Carnival Corporation, traded at New York Stock Exchange, ticker name CCL, which is quite big company actually with a market capitalization of about 23 billions. And we did today a quite nasty decline, minus 4.69%, finishing 2092. After hours, some small positive volatility is observed, but the question is, does it really matter? Because what we see here is already long-term lasting correction, and looks like we're having a second accelerated channel forming, and it means that soon there could be a very nice rebound. So what does it mean? Let's look here at the moment when correction started to take place. You can see here was one channel, and then now we see a slightly faster channel actually is of the correction is taking place. Here we're sitting in the bottom of it, so it was immediate decline from the top, and we go down. It could mean that we might pierce it, and then it should be very strong rebounds. Usually, this is how it happens. Also, if you look at MACD, we are about to finish this third declining wave, and then once we go to the positive and pierce upwards, should be very strong momentum. Also, RSI is negative. It's 22, so very low, and it means there are a lot of new people sitting without profit. Meaning keeping funds, so they are ready to wait until the price goes higher. And it could be as similar to what we had in December, two-step, let's say, breakout, or could be just going till moving average 20, because also another very positive momentum here is the distance between moving average 20 and the current price is quite high. Why is it important? Because once you have these corrective patterns, this distance creates a positive pressure, because the moving average 20 in this case works as an attractor and resist simultaneously. What does it mean? It means once the price is close to it, it works as a resist. Once the price is lower, far from it, downwards, it works as an attractor. And here we see the attractor mode is on, meaning that the price pressure towards moving average 20 is increasing, so it wants to go there. This is very strong indicator for corrective patterns usually. And what does it mean? It means that if you are sitting in the position at this moment and you start buying through, you can be actually right in time to make profit. So now let's talk about the levels we want to buy through. And as I said, it could be a small breakout downwards, so we will just wait a little bit lower, actually also fitting ourselves to these levels formed by February price action. And this would be then, we can put this one a little bit higher. So meaning that we can just start buying already from the lows of the current candle. So this would be between 1904 and 2082 would be the first technical level, so the primary one from where we can expect the first rebounds and actually profit taking. We always discuss at our channel two technical levels and actually one risk mitigation or negative catalyst mitigation level. What does it mean? It means that two technical levels are, or two technical patterns actually are related to two technical levels, meaning that these are the primary technical pattern that can be happening, or if this is cancelled, then what is the next one? And this is the secondary level and the second technical pattern that can be happening. And so these are the price levels that can be expected. And the third one, we call it risk mitigation or negative catalyst risk mitigation, because this is the level, the third one, that is not expected at all. But if something like a doomsday scenario is taking place, there is sudden bad news that you cannot expect, sector or market or global market related situation, which you cannot again expect, but you keep some funds to buy there. That's why we keep the third level as a principal level. We just keep funds there to buy if this is happening. This is very rare that it will happen, but if it happens, you don't lose your money. You buy more there, average down non-linearly, and then on rebounds, you actually get back everything with a profit. So this is the strategy at our channel. And now let's talk about second technical level. We can a little bit demagnify for this. You can clearly see the second level is formed here in the vicinity of 17, let's say about 40, 17, 44, and the lower part will be actually just a little bit here. So this is the level that was pierced many times previous year, May, November. And again, it's already quite low, so it's not expected also even from technical point of view to happen, but still can be if the first pattern is if the first level is strongly declined. Therefore, we can put our second call out here. This will be between 1604 and 1744. Let's put it there. So this is our secondary technical level, or second technical pattern that can be expected here. And now let's talk about risk mitigation. Of course, for risk mitigation, we just keep some funds, as I said, not expecting it, but just keeping it at the very principal low levels that could be observed. And here, if you look historically, this is the level. It's actually between 12.78 at the top and 11.70 at the bottom. So this is just funds we keep in case of any doomsday negative scenario takes place. Why is it important? Because as you have noted, we are not talking about any stop loss approach, because stop loss approach is the situation when you buy your time with money. Here we don't do it because we buy non-linearly through the levels. So we buy money with time, meaning that we are okay to wait a little bit longer, but still we want to exit with a profit or with a draw, let's say with any negativity in the worst case scenario. So this way of trading is usually suitable for big money traders or for those who are looking for secondary source of income. So you are not sitting at your PC like on the 15 minutes and daily candles looking through the day trade. You just want to check it once in a day, or let's say twice in a week, a couple of times in a week. And that's why I think this way of trading is the most suitable. And since those who seek for an advice in YouTube are usually these kind of people, I think it would be the most appropriate approach. That's why we use it at our channel as a main approach. And as you have noted, we always talk about, almost always talk about stocks in correction, because stocks in correction are so predictable, are so clear behaving. If you see the pattern, it's usually very hard to make a mistake there. That's why if you also look through the videos we posted at our YouTube channel, the success rate is very high actually. And soon we're going to issue video with all analysis and statistics for this 1.5 year of analysis that was done at our channel. So with this being said, that's all at the moment for CCL. Quite nice company, big market capitalization, so should behave as predicted. And talking about still profit taking, and because the volatilities are quite high here, also profit can be taken here, let's say, from 10 to 15%. So once you can take it, really do it. And how to buy through non-linearly, as I said, it's a low risk scenario, so 5-portion classical play, meaning that the money you would like to play here, you can split in 5 portions, then you can buy with 1 portion through the first level. If the price goes to the second technical level, you can buy with these 2 portions through that second level, and you keep remaining 2 portions just in case there is a bad negativity and we go to the third level. What does it mean to buy through the level? It means that, for example, you take 2 portions and you buy through the second level. You are not immediately buying for all this money with 1744, and as well you are not waiting for 1604. So you start buying slowly. You can sub-split these 2 portions at another 3, let's say. You buy when the channel is opening. When the level is opening, you buy somewhere in the middle, a little bit lower than the middle. So this way, your through level buying will be close to middle of this level. So once the rebound takes place, you will take opportunity to take the maximum profit actually. So with this being said, that's the way we trade. If you like it, follow us. Don't forget to press the bell button as well for new videos. If you like CCL or you are going to trade with it, good luck with this one, and see you at another episode of Stocks Advisors channel.